Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comment, and content related to the topics of the channel, which I'll go through in just a moment. And note that Bookmap Discord is free and open to everyone, whether you subscribe to Bookmap or not. And I'm also on X, formerly known as Twitter. My name there is @DougPless. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step on my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups today, I will be talking about an underlying asset. And setups can be taken any number of ways. For example, the S&P 500 setups can be taken with futures, shares, SPY options, or SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat in YouTube for your questions and comments. So please feel free to post, and I'll do my best to answer your questions. All right, here's my agenda for today. Here's what I plan to cover. I'm going to go over news items, economic data, and events for today and the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from this morning. And then I'll take a look at the live market. And if anyone has any stocks they want me to take a look at when I get to the live market, please let me know and I'll be glad to do that. All right, economic data, jobless claims did come out this morning. And then tomorrow is the big event for the week, economic event for the week. It is the jobs report that comes out at the first Friday of the month at 8:30 a.m. Eastern Time. So we'll be looking for the jobs report tomorrow morning, potentially a big market mover, and we'll talk about it tomorrow afternoon. All right, let's get started with positional analysis now. I'm going to start with the S&P 500. This is the ES futures in Bookmap. And before I take a closer look at this chart, I'm going to look at a larger time frame. I'm going to start with SPX. This is the SPX in a 30-day 1-hour chart. I have highlighted here the September 15th expiration. That's the Friday of the expiration. That was a call-dominated expiration. And since then, the S&P 500 has trended down and may be finding support right around the right now above the 4200 put wall level. All right, I'll talk about the levels now. So first of all, here is the dashed purple lines showing the lower and upper weekly expected move. That's based on the options market, indicating a 1 standard deviation move for the week. SPX should trade within that range 68% of the time, according to the options market. All right, so that's the lower and upper weekly expected move, and the lower weekly expected move was in play for today. Then the dashed blue lines are showing the lower and upper daily expected move. Again, based on the options market, these change every day. All right, so those are the expected moves for the week and for the day. The dark red horizontal lines are showing Spotgamma proprietary gamma levels. These are based on gamma weighted open interest. These are available to Spotgamma subscribers. I'm going to point out the key daily levels. First of all, here's the 4200 level. That is the put wall. That's the strike with largest net negative gamma that can be expected to act as support. Then above that is the 4300 level, and that is the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. And note that level did move up from yesterday. It was kind of at a strange level at 4,000, which was below the put wall, which is very unusual for SPX. That does occur in stocks sometimes, but pretty unusual for SPX. I don't think I've ever seen that. So anyway, the absolute gamma strike is back up to 4,300 above the put wall, and 4,300 is also the volatility trigger, and that is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price, and that tends to enhance or increase volatility. All right, so 4,300, very important level, volatility trigger and absolute gamma strike. And then the call wall remains at 4,450. That's a strike with the largest net positive gamma, and that can be expected to act as resistance. So 4,200, the potential floor, 4,450, the potential ceiling, with the most amount of gamma concentrated at the 4,300 level. All right, let's take a look at one more SPX chart. This is the SPX in a 1-day, 1-minute chart. The lower daily expected move has definitely been in play for today, acting as support except for one brief excursion below. Then this combo L3 level did act as resistance earlier today. That was a setup for a nice short. And now it looks like price is trading up above that level. I'm going to let me clear this. So here's the lower weekly expected move. So it looks like SPX today did not trade down that far. It found support at the lower daily expected move. There's the lower weekly expected move and the lower daily expected move. All right, let's take a look at Bookmap now. In Bookmap, I have my own cloud notes. I'm showing a variety of levels here. First of all, I'm showing SPY levels on this chart, and let me just check something. Alright, so here's the SPY 425 level that did act as resistance right at the open. And before that, this SPX 4268 level, noted as resistance in the Spotgamma AM Founders Note, did act as resistance just after 8 a.m. Eastern Time. Then the 425 level, that's the absolute gamma strike in SPY, did act as resistance. And then here's this 4251 combo 3 level, combining SPY and SPX gamma into one level, and the 4250 level is just below that, acted as resistance, and now it looks like price has broken through that level. Oh, that's the 424 acting as resistance, I'm sorry. There's the 4250-51 level acting as resistance. And note that the ES did trade right down to its lower weekly expected move, which is going to be a little bit different than the SPX lower weekly expected move. Note also the SPY 422 level in play, acting as support. So the SPY round number levels have been important today. Alright, so I have SPX levels, SPY levels, as well as the expected moves on this chart. Note there is a difference in price between ES and SPX, and right now it is about 33 points. That's what I use today. So for example, SPX shown here at 4250 is actually at 4283 for ES. And also the SPY to ES ratio changes a little bit every day as time passes toward the next rollover date, the contract expiration. That number will trend toward 10.0. So right now, today, I'm using 10.11. Alright, so those are the levels in play for today, both SPX and SPY levels, very important today. And we'll talk about setups in a few minutes. So shifts in levels, I talked about the absolute gamma strike for SPX, moved higher. The SPY absolute gamma strike also moved higher from 420 to 425. So those shifts higher in the absolute gamma strikes for SPX and SPY, I interpret that as bullish. And then for SPX and SPY, the volatility triggers both shifted lower. And also for SPY, the call wall shifted lower, back down to 432. So kind of a mixed picture for the Spotgamma levels, the key daily levels for the S&P 500, volatility triggers and SPY call wall moving lower, and absolute gamma strikes for both moving higher. All right, let's take a look at NASDAQ now. And NASDAQ has been a very good play from QQQ 360 to 355. So let's take a look at that on a QQQ chart. So we can just isolate the QQQ levels. So 360 for QQQ is a very important level. That is the absolute gamma strike as well as the volatility trigger. And that level did act as resistance right at the cash open just a few minutes later. And then price traded all the way down pretty quickly down to this 355 level, which is an L3 level. So that's in the middle of the range of 1 being the most important to 5 being the least important, and also a combo level that combines QQQ and NDX gamma into one level, gamma weighted open interest. All right, and I'll show a trade in a few minutes when we get to setups, looking at either a long call or a call spread at this 355 level. All right, so those are the QQQ levels in play for today. Again, First of all, nice short from 360 to 355, and I believe that was confirmed by options traders. Again, we'll take a look at setups, and then now 355 acting as support, and QQQ looks like it may be heading back up to the 360 level. All right, so that's QQQ. Again, round number levels, gamma levels, very important today. Let's just take a look at NDX for completeness. Here's NDX, combo level, right at the 360 level, the QQQ 360 level, and this combo L4 level just below the 355 level. All right, let's go to Bookmap, to the NQ futures. Again, I have my own cloud notes. I'm showing QQQ levels. There's the 360 level, very important level for QQQ, acting as resistance. Then here's this 355 and that combo level that acted as support. NASDAQ did trade below its lower daily expected move and is now back above that level. All right, so again, the most important levels today were the QQQ 360 and 355. And again, 360 is the absolute gamma strike for QQQ, and that level did move higher from 350 yesterday to 360 today. I interpret that as slightly bullish. So the absolute gamma strike shifted higher for SPX, SPY, and QQQ. All right, so for the NASDAQ, that shift higher, and the absolute gamma strike for QQQ was the only shift. All right, let's take a look at, again, we'll take a look at setups in a few minutes. Let's take a look at gamma notional now. To see how market makers were positioned on the gamma curve at the beginning of the day, and this will give us an indication of how market makers may react with changes in price and implied volatility. We'll take a look at it, and we'll also look at the Vanna model to see that. So what I'm going to take a look at first is gamma notional to see how market makers were positioned on the gamma curve at the beginning of the day. I'm looking at gamma notional for SPX, SPY, and QQQ. Gamma notional for NDX is typically not significant. All right, so market makers' position on the gamma curve at the beginning of the day was negative for all these indices. Minus 2.076 billion for SPY. That is less negative than yesterday, but still very negative. So all these are negative, indicating traders are long puts, market makers are short puts, and they have to trade with price to hedge their delta exposure in a negative gamma environment. Now all these levels did shift higher, less negative than yesterday, but still quite negative. Well, let's take a look at the Vanna model to give us a visual representation of what I'm talking about. I'm going to start with the SPX. What this chart is showing is market makers delta notional on the vertical axis and price on the horizontal axis. There are two curves on this chart. The light gray curve is showing how market makers delta notional changes with changes in price only. And then the purple curve adds implied volatility to the equation. That's showing how market makers delta notional changes with changes in price and implied volatility. And that change in delta with the change in implied volatility is the Vanna effect. Vanna is a second order Greek. So remember, market makers always want to remain delta neutral. So as price, in this case, looking at this chart, as price decreases, implied volatility increases, market makers have to sell futures to hedge their delta exposure. On the other hand, if price increases, shown here, market makers can buy back their short futures. That's a put-van rally, and that can fuel a powerful rally. If price gets going, implied volatility starts dropping, these puts, market makers are short puts, those puts quickly lose value, and they can buy back their short futures. All right, let's take a look at prices now. So for the lower of the day for SPX, low of the day was 42.26. So that's somewhere between these two lines. So what this is showing, as price was dropping, market makers had to sell futures. Then when price started to increase from that level, market makers can buy back short futures, and that can fuel a powerful rally as market makers are trading in the direction of price, buying back short futures. All right, so again, the low of the day for SPX right around here. All right, let's take a look at SPY. So for SPY, the low of the day was right around 421. So that's right around here. Again, on the very steep portion of this curve, indicating market makers will need to aggressively hedge in both directions. And then finally QQQ. QQQ low of the day again, 355. We looked at that. Right around there. So again, on the very steep portion of the Vanna curve here, indicating market makers will aggressively have to hedge in both directions. And all these curves are the very steep skew to the left is typical of a very negative gamma environment. All right, let me check for questions. D&T Matter says, hey Doug, hello. Your ES, upper and lower daily expected move is different from SPX, yes. And I give precedent to the SPX levels always. So for SPX, I use the options chain, and for ES, I use the options chain. So no, I do not convert the SPX daily expected move to ES. Maybe I could. This is just the way I started doing this. So, you know, it is going to be a little bit different because of the trading hours and things like that. So again, I always give precedent to the SPX. ES is just a derivative of SPX. All right, let's take a look at some setups now. I'm going to start with the S&P 500. What this chart is showing, this is the hero signal. This is available to Spotgamma subscribers. This chart is showing the price with the white line for SPX and the hero signal, HIRO, hedging impact real-time options, for a combined signal for SPX, SPY, XSP, and ES futures. So if you trade any form of the S&P 500, this is the signal that you want to take a look at. All right, let's zoom in on this chart. So the hero signal again is showing options trades and market maker hedging activity for that combined signal. A rising line indicates traders are taking positive delta positions. Market makers are taking the opposite side, so they have to buy futures to hedge their delta exposure. Then a falling line is negative delta, indicating traders are taking negative delta positions. Again, market makers taking the opposite side of that trade, and they have to sell futures to hedge their delta exposure. And market makers are hedging options trades in all these instruments with ES futures. That's the most efficient way for them to hedge. All right, let's take a look at a closer signal, a closer look at this chart. I want to focus on first of all a short setup in the morning here. Right around 10:30, traders started taking negative delta positions. That was right at that cluster of levels, the 42.50 and 51. Here's the 42.50 right here. So 42.50, 42.51. Options traders started taking negative delta positions, and that was a great setup for a short. So let's go take a look at Bookmap now, and we'll take a look at the information that the order flow that confirmed that setup. Let's go back to the S&P 500. And you're welcome, DNT Matter. All right, so let's zoom in. All right, so right around 10:30, just a little bit before, we know that options traders were taking negative delta positions. Market makers were selling futures. And I look at any of these Spotgamma levels as potential resistance if tested from below, or potential support if tested from above. In this case, these two levels, 42.50 and 51, did act as resistance. And every time price reaches that level, aggressive sellers start to come in. That's shown by the magenta volume dots there. The volume dots, those are delta, showing market buy minus sell. A green dot indicates there are more buyers than sellers. A magenta dot indicates more sellers than buyers. So every time price reaches up to that level, aggressive sellers come in, and after the third test, the buyers are exhausted and price moves sharply lower down to the lower weekly expected move toward the lower daily expected move. And a good entry point there would have been this last lower high or the break of this little trend line right at 423, SPY 423, and you can just see all of the aggressive sellers in there. So we know that, and once this got going, it was fueled by sell stop orders, shown by these small red dots, also shown by the falling yellow line. This pink line is showing cumulative volume delta dropping sharply. And then the light blue line is showing large traders selling with iceberg orders. This is a pretty small number, 122 contracts, and this actually indicates it might have been canceled, but this line is showing that there were sell iceberg orders there. All right, so we know that traders were taking negative delta positions. Price broke below this level. Aggressive sellers came in, so good for a short setup in the S&P 500. All right, so looking out at the big picture there, this was the setup down to the lower weekly expected move. Price consolidated for quite a bit, started moving higher, and in this case, both the iceberg line is rising as well as the CVD line, showing more aggressive buyers coming in. Price does a retest of 422 and is now moving higher. Let's see what options traders are doing right now. Let's go back to Hero. All right, 11:10. Let's just take a quick look. So 11:10, there's that low. Then price starts to make a series of higher lows, does a retest of 422, and then really makes the sharp move higher. Let's go back to Hero. All right, you can see that the shift in Hero here. That one move, then a retest. Traders start taking negative delta positions, then right around 110, started aggressively taking positive delta positions again. Let's just slice and dice this a little bit. Let's take a look, first of all, at puts and calls and see what traders are doing. So traders are buying calls and buying puts. That's pretty typical for the S&P 500. Calls shown by the rising orange line. Also the positive notional value here, 3 billion. All right, I did report this problem to Spotgamma. So far they have not been able to recreate it. I'm not sure what is causing it. All right, so we know the traders are buying calls. They're also buying puts, shown by the falling blue line. The negative notional value here, but the call buyers are more aggressive than the put buyers today. Let's go back and take a look at the total signal. Then let's just check and see what 0 DTE traders are doing. So there's a very strong correlation between the 0 DTE traders shown with the green line. These are options that expire today for the S&P 500's next expiry, which for the S&P 500 would be today. And then the purple line is showing all expirations. So it looks like a large component of the options trades today are 0 DTE options trades that expire today. All right, let's just go back to the total signal. So overall today, Hero has been a very good confirmation of trades of price action in the S&P 500. Oops. Let's take a look at NASDAQ now. So this is a combined signal for NDX and QQQ. So first of all, I want to highlight this divergent short in the morning. Notice traders start taking negative delta positions from the open. Then it takes price a few minutes to respond lower. So let's go take a look. Remember that reversal at the QQQ 360 level. So we'll go to Bookmap now. Go to NQ. So this is the, let me tone down the volume dots just a bit. All right, so this was a pretty easy read in NASDAQ. If you were quick, there's the reversal lower at 360, a level that you expect to act as resistance. Aggressive sellers come in. Note the almost all magenta volume dots falling as traders taking negative delta positions. Market makers are selling in Q to hedge their delta exposure. Falling cumulative volume delta, sell stop orders fueling the move lower. Those are shown by the falling yellow line, as well as these dots here. And then also, just gradually, large traders are selling with iceberg orders. It looks like they have been doing that all day. Large traders use iceberg orders to hide their size. And the falling light blue line indicates they are selling with iceberg orders. All right, so nice short setup in NASDAQ from the open. All right, let's take a look now. So right around 11:30 is when price started to reverse higher. Aggressive buyers coming in, shown by the rising cumulative volume delta. And the magenta to dark blue indicates that cumulative volume delta has turned positive for the day. Let's go back to Hero now. So we looked at the short setup from the open, and then right around 10 o'clock, 10:10, traders started taking positive delta positions, and overall Hero has trended higher with some ups and downs. But it looks like when Hero made this higher low here was the time for a long entry. All right, so that's NASDAQ, short and long. All right, let's take a look at some stocks. I'm going to start with AMD. So again, a short and a long. From the open, traders taking negative delta positions. And when traders take negative delta positions, when they buy puts, for example, market makers sell the puts, and they have to sell stock to hedge their delta exposure. And note the flow alert here, right at 9:40, as AMD crosses or actually approaches, and then crosses the 102 hedge wall. Let's go take a look at Bookmap. Go to AMD. All right, so there's the short first thing in the morning. Pretty similar to the sharp drop lower in NASDAQ. And that flow alert came in right around here. Let's go back and take a look now. So then around 10 or so, traders started taking positive delta positions, and prices reversed higher. Alright, the next is Meta. Pretty similar price action. Traders taking negative delta positions from the open, shown by the following purple line. Also note the flow alert here at 9:40. Let's go take a look at the Bookmap. Let's go to Meta. Note 300 is the key gamma strike. Very important level for Meta. That was the price target for the move lower, as well as the support level. Clean up this chart just a little bit. Zoom in. All right, 300, the key gamma strike. Target for the quick move lower. I think that alert was at 9:40 also, so right around here. Sharp drop lower as traders were taking negative delta positions. And a quick drop down to the 300 level, consolidation for around an hour or so. And let's go back and see what options traders were doing. So here's the consolidation. Then finally traders start taking positive delta positions around 11:30 and price moves higher. Let's just see what they were doing. So net for the day, they have still been selling calls. This notional value for call line is negative, but they shift. Well, sorry, I'm going to make a note of this. So they shift from selling calls, taking their foot off the gas, then they start buying calls 11:30, 11:40, price moves higher. So at the same time they were selling puts here, they start selling puts again, and price responds higher with support at the 300 key gamma strike. Let's go back to Bookmap. It looks like there is somewhat of a shift in order flow here, with more green volume dots coming in, more aggressive buyers at that 300 level. All right, the next is Netflix. Let's go to Hero. Take a look at Netflix. And note, I do not have Netflix on Bookmap. So we'll just take a look at it here in Hero. And this may be difficult to see, but there's a flow alert right there, right at the open. Looks like at most a minute after the open, a flow alert, and that's at the 377.50 hedge wall level. Options traders take negative delta positions. Netflix moves lower. And notice options traders take their foot off the gas. Netflix price has consolidated, leveled off, not doing anything since about 10:30 or so, 10:40. Let's just see what they were doing. So they were buying puts and selling calls. All right, the next is NVIDIA. It was definitely a choppy morning in NVIDIA. But overall, the trend for Hero today is rising. Call wall at 450, potential target maybe not for today. Actually, maybe so. So it looks like NVIDIA is trading at 448 now. So that 450 call wall, key gamma strike, is definitely in reach for NVIDIA as traders continue to take positive delta positions. Note another flow alert. So there was some chop today, but right around 1040, price finally got going up at a nice uptrend. And traders were buying calls and selling puts. So you have the alert that to get your attention, and then watching Hero, you can see that traders are taking positive delta positions, market makers taking the opposite side. They have to buy NVIDIA stock to hedge their delta exposure. Let's go take a look at the Bookmap. And make a note of that. Go to Bookmap, NVIDIA. So here's the choppy session. Support 439, resistance 445. Then finally the uptrend begins. So pretty difficult to trade today, at least in this morning session. Truman says I really have not seen that much chop around 1045 in NVIDIA. This is chop that long. I don't think I have seen, or that may be atypical, but some chop maybe for 30 minutes, for the first 30 minutes for NVIDIA is somewhat typical, but going on for that long, not necessarily so. But anyway, the nice uptrend begins around 1035, 1040 as traders continue to take positive delta positions. Let's take a look at Tesla. Let's see what options traders are doing. And it looks like order flow has pretty much made a pretty drastic shift here from magenta volume dots to green volume dots. So aggressive sellers gave up right around noon and aggressive buyers came in. Very stark contrast there between the aggressive sellers and aggressive buyers. Let's see what options traders are doing in Tesla. Let's go to Tesla. Here we go. All right, a couple of flow alerts here in Tesla today. Looks like both were good. Looks like if you were quick in the morning, there was a long setup from the open, then a divergent short. So after that quick move higher, just about 10 minutes after the open, traders started taking negative delta positions. It took a few minutes, but Tesla responded lower. So that was around 9:45. Then 30 minutes later or so, options traders started taking positive delta positions. And Tesla finally responded higher about 11:10. So here's a divergence long setup. Right around 10:50, traders start taking positive delta positions. And Tesla responds higher about 20 minutes later. Note this flow alert comes in right around 11:40. So let's go back and take a look at Bookmap. All right, so that alert came in somewhere right in here. All right, so just looking at this in Bookmap. So we know that options traders, just from looking at Hero, options traders are really driving price up and down in Tesla. Looking here at Bookmap, this trend break nice steady uptrend as traders started taking positive delta positions. Stark shift from aggressive sellers to aggressive buyers, and then a retest of the 258 level. And now Tesla continues higher as traders are taking positive delta positions and aggressive buyers are buying Tesla stock. All right, anyone have any questions? Any stocks you want me to take a look at? Now would be a good time. All right, so overall, Hero continuing to trend higher from right around 1040. Overall trend higher as traders are taking positive delta positions. So for the day, they are buying calls and selling puts. Both notional value for the blue line and the orange line are positive. All right, so Caleb wants to take a look at Apple. Let's do that. All right, so options traders not really driving Apple today, it looks like. At least in the morning they were. Let's zoom in on this. So there was a short setup. From the open as traders were taking negative delta positions. And then they have continued to do that. And his price is now moving higher. So Hero trending lower. Apple moving higher, so options traders not really in control today. Let's go take a look at Bookmap. All right, so there's Apple. Let's just take a quick look at NASDAQ here. All right, so it looks like Apple may be just being dragged higher by NASDAQ. Well, that's the S&P 500, sorry. All right, and Moscone wants to look at Google. Let's go see what options traders are doing. So typically Apple and Google are not very large movers, not like Meta and Nvidia and Tesla. Apple and Google are much slower moving during the day. All right, so let's go take a look and see what options traders are doing at Google. So in the morning, options traders not doing much, not really supporting that move lower. And then a flow alert comes in. So price reverses at the 135. That's the key gamma strike and the key delta strike right there. Price reverses lower around that level. Options traders not really supporting the move lower. And then right around 1040, this flow alert comes in. Second alert at 1140, and Google responds higher. Back up to the 135 key gamma strike as traders are taking positive delta positions. Let's go back to Bookmap. So there's Google, the reversal higher as traders started taking positive delta positions. Google breaks that trend line, starts moving higher. All right, let's check the S&P 500 and the NASDAQ. So after this sharp move higher with aggressive buyers, this uptrend, it looks like it has slowed down a bit, but maybe finding support at 424. Let's take a look at Hero and see what options traders are doing. Let's go to the S&P 500. Zoom in on this. So overall, the trend for Hero is moving higher, consolidating somewhat right now. And price is consolidating. Let's take a look at a 30-minute look back period so we can just see the last 30 minutes of data instead of the entire day. So this shows that traders are right now, Hero is trending lower, making potentially a series of lower highs. And price is consolidating. Let's go back to Bookmap. All right, so some aggressive buyers coming in at the SPY 424 level. Large traders buying with iceberg orders, also selling almost at the same time. Let's check on NASDAQ. And Moscone, you're welcome. Thanks for the request. All right, so NASDAQ. Maybe find its support at the 14,850 level. That's NQ 14,850. Let's see what options traders are doing in NASDAQ. So it looks like they're consolidating as well. Options traders, after this big push higher, taking the foot off the gas. Oh, I meant to show there were a couple of example trades that we can take a look at here in QQQ. So if you do trade options, here are a couple of examples comparing a vertical. So the idea of a vertical is it increases your probability of success, and the only hurdle that QQQ had to reach was staying above this 356 level. So this is a 355, very small vertical that expires today, 355, 356. So whenever you limit your upside, you're generally increasing your probability of success by, again, limiting your upside. And here's the buying an option. And it turns out this was the better choice today. So a 90-cent option is now trading the open profit from the open, $180. So if you double your money, so you have a 2x, 2-to-1 risk to reward ratio from buying that call at the 55 support level. And I'm showing there the call just above that, or slightly out of the money. So for you options traders, there are a couple of options. Again, looking at a spread trade, high probability of success or higher probability of success. You don't have to worry about that theta burn. Not nearly as much as you do when you buy a single option. All right, Joel says QQQ, not sure what you want here. So here are a couple of trades that I mentioned in QQQ. Again, now this as QQQ continues to rise, jumping up to $220, so more than double your money. We can take a look at that and go back to Hero and then Bookmap, and then we'll wrap it up. So I'm looking at the combined signal here for NDX and QQQ. We can take a look at the QQQ signal, which is the largest component of that by far. And one advantage of looking at the QQQ signal is that the alerts will be available. So here's the latest flow alert right here. This one turned out to be timely. Also one right at the open, and the others not so much. So there's QQQ. Traders are taking positive delta positions. Let's see exactly what they're doing. So they are buying calls and buying puts, shown by the rising orange line for calls, the falling blue line for puts. Call buyers more aggressive. So overall net for the day, the hero signal is positive notional value. And we can look at the QQQ chart in Bookmap. I normally just look at the NQ chart for any form of NASDAQ. It just provides a lot more information. And I go to the, I do the work to translate the levels from QQQ to NQ. All right, so there's QQQ. Looks like QQQ found support just above the 355 level. There's the resistance at 360, and now QQQ heading back up potentially toward the 360 level. All right, Hunter says, hi Doug. Hello Hunter. If you see largest traders of the day on futures market get trapped by selling at the bottom or buying at the top, will heavy volume and trading an option anyway affect the futures? Yeah, so I'm not really thinking about traders being trapped long or short. I'm looking at the options market as a key driver of price. Again, traders are buying and selling calls and puts. Market makers are taking the opposite side of that and hedging with, in the case of NASDAQ here, with NQ futures, or the S&P 500 with the ES futures. All right, Joel, so I showed you QQQ and NQ. Hope that answered your question. You're welcome. So again, if I'm trading QQQ, like I showed the options trades today, taking a long call at right around the 356 long call, right as NASDAQ was at this level that I expected to act as support, but I'm looking at the NQ chart. So the levels aren't perfect. That NQ to QQQ ratio does change a little bit during the day. It looks like I may have had it a little bit too high. But the QQQ chart just shows me so much more. I get the stops and icebergs and an order flow that's easy to read. So again, I go to the trouble of putting my QQQ levels on my NQ chart. All right, everyone, I want to thank you for watching. Thanks for your questions and comments. And remember, tomorrow at 8:30 a.m. Eastern Time, the jobs report comes out. Should be a big market mover. Remember, the indices are in a negative gamma position, and this could potentially fuel a move up or down in this negative gamma situation. If price starts moving higher, implied volatility drops, then the jobs number is not bad or not as bad as expected, then that could potentially fuel a put Vanna rally. So we'll take a look at that tomorrow, and we'll talk about it tomorrow afternoon. And Joel, you're very welcome. All right, again, everyone, thank you for watching. Thanks for your questions and comments, and I will see you tomorrow. Bye.